So I just want to take a minute today to talk about Amgen, because I think Amgen is one biotech that doesn't get the respect that it deserves given its strong pipeline. And granted, there has been some hiccups as of late with brodalumab, but I think that the pipeline is still very strong, and perhaps the market's not giving Amgen the valuation that it deserves. If you look here, this is just from Morningstar, but you can see that the free cash flow realistically, it was in 2013 5.5 billion, jumped up to 7.5 billion. I think estimates for this year around 6 billion. I think 6 billion is a reasonable number that Amgen can sustain over the long run. And I think even more than that if things go right for Amgen. As many of you know, that Amgen's got a few approvals coming in the next month, and a couple this week and next week. So this week, on the 26th, which is a Sunday, there's supposed to be a decision on Kyprolis in the second line multiple myeloma, and so that could come out on Friday. I don't know, but just as a matter of disclosure, I am long Amgen, so take all this with a grain of salt. But I do think it's a great company and a great time to invest, even with the recent run-up. I think there's still more room to run. I think it's really valued around 180. But so you've got on July 26th is the Kyprolis decision, and then I think on July 28th you've got the TVEC combination therapy decision with Merck's Keytruda. I don't know if I'm saying that right. But also the biggest thing, and today we learned that Amgen got approval in the European Union for Repatha, which is of course the PCSK9 inhibiting drug that is anticipated to be a blockbuster, but I think there's some questions around how broadly it will be approved before the outcome studies in 2017. But I think that it's going to pleasantly surprise and be kind of like Gilead's hepatitis C drug, and beat expectations when it starts to roll out, because I think there's a lot of pent-up demand and a lot of people who need this. But so if we just look at the product sales, so this is from the 10K. I just pulled this from the 10K, most recent 10K 2014, and we see that Neulasta and Neupogen is a huge component. Neupogen, we got the decision today from the district or the U.S. Court of Appeals, basically said that Sandoz, Novartis's subsidiary, could start marketing that September 2nd of this year. So there's going to be some competition, but I think everybody anticipated that. I think, basically through this suit, Amgen's bought itself, from March when it was first approved, bought itself some extra time until September 2nd. So they got kind of a free 6 months there of no competition. But this Neupogen piece, that's only about 1 billion in sales of this 5.7 billion last year, and so the majority is Neulasta. Now next year Neulasta could be facing competition. I think that's what's been keeping the stock down. But I think there's a good argument to make that Neulasta won't. You're not going to see the dramatic fast declines that you do with small molecule drugs when a generic comes online. Here, the Neulasta biosimilar that would come online maybe next year, that would, definitely take some share away, but I think in the European Union with the biosimilar competition, they've seen in the end, that the original sponsor has retained like 60% market share, and prices come down about 30%, if I remember right. So it's not like this entire $5.7 billion is going to go away, especially with the on-body injector that Amgen introduced, which would help, I think, encourage sticking with Amgen's Neulasta product, just for the access to that on-body injector. But that's not going to be, that's going to help with some, but not all. But so I think that, my estimate is over the next 3 years, that this 3 to 4 years, that this gets cut in half. So maybe we're $3 billion-ish range. So if we take away $3 billion, I think so. You've got about $3 billion to make up, and then the other products, Epogen, could also be, and RNS also be facing some biosimilar competition. I think those get cut in half over the next 3 or 4 years. So those two total about $4 billion. So I think they got $2 billion here. I can't spell, that you got to make up. So in all, and sorry for my handwriting, you've got $5 billion that needs to be made up in sales just to kind of break even to where we're at right now, right? So is that possible? Well, I think it is. So why do I think it? So I said, I mentioned on the previous slide, I think we got $5 billion lost sales in the next, and we could have some lost sales from Enbrel too, that because of competition from Cosentyx, is that right? Novartis's product for psoriatic arthritis, and other competition there. But so $5 billion-ish, I think, that you need to make up. So how can we make that up? Well, so the big one is Repatha, right? And I think be pleasantly surprised that even before 2017, I think you can get $1 to $2 billion in sales, and then after that, I think you could get realistically $5 to $7 billion after this. Assuming the outcome studies are favorable in 2017, this is used broadly. Because I think that a good estimate of the market is like $20 billion, and then if we assume that Amgen takes a third of the market share, split with Sanofi, Regeneron, and Pfizer, $5 to $7 billion isn't unrealistic. And then Kyprolis is the next big one, and I think in the next 4 years that could get to be $2.5 billion product realistically. Velcade's already there, and basically if this replaces Velcade, which I think the expectation is there, to use in combination with Revlimid, then you can get to $2.5 billion over the next 4 years. And then we've got things like, unfortunately we don't have brodalumab, which could have given us an extra $1 or $2 billion of our split with AstraZeneca. So you don't have that, but you've got T-VEC, which I think people don't realize how big that could be in combination therapy. And you've got all these, what do they call them, anti-PD-1 inhibitors that other companies like Merck and Bristol Myers are developing, and the data so far seems promising that TVEC in combination would make that even more potent in cancer. And so I think, we've got a really good shot with TVEC as kind of being used in all sorts of cancers. And so I think that the market's not really taking that into account, that this could be a blockbuster drug, and I think in the billions. So I really think it's realistic. You could see $2 billion in the next 4 years, and then you've also got Blincyto, which is also one of your immunotherapy drugs. This is the BiTE, on the BiTE platform, which Amgen does have at least another drug in phase 1 using the BiTE platform. But I think this BiTE platform, could be, and it was mentioned before by Amgen's head of R&D, Sean Harper, that really could be kind of what the first immunotherapy, that backbone platform type thing, because some of these other CAR T things and stuff are going to take years to play out. And so although right now it's only in a small indication, I think it could expand as well, and you could see yourself at a $1 to $2 billion drug there, maybe even better depending on how things play out in other types of cancer. And then you've also got the romosozumab, that's also got some potential, kind of like Prolia and Xgeva with the bone osteoporosis stuff. And Amgen is in a partnership with that, so I think they have to split it. Could be a $4 billion drug, $3-4 billion drug, and Amgen could get half of that over the next 4 years. Maybe not quite $2 billion. Plus, you've got other acquisitions, things. You've got the partnership with Kite. You could have other therapies coming down the line. But if we just look at these, which I think are realistic ones, you add that all up, let's say 1 billion, 2.5 billion, 3.5, 5.5, 7.5, 9.5 billion there, 9.5 to 10 billion, and then you've got, if this plays out here, you could be looking more like, if this here plays out, then you could look at another, 3 to 5 billion to that. You got anywhere from 12 to 15 billion of additional sales, right, in the next 4 years. So we got to subtract out the 5 billion that we're losing, and you come out with a net, you got a net 7 to 10 billion of, that's not a plus sign, 7 to 10 billion of sales, which could put Amgen sales, around 27 billion in about 3-4 years. So if we have 27 billion in sales, what does that mean for Amgen valuation wise? Well, on average, Amgen has been able to take about 30% of sales and turn that into free cash flow. And so 1/3 of that would roughly be about $9 billion in free cash flow. So free cash flow And you know, if in 2017 we're assuming, so if we assume 20 times free cash flow multiple, then that would get you to $180 billion valuation. And and so right now the company's worth is trading at about $125 billion market cap. So you've got about $55-60 billion, more. So about 50%. That's about a 50% difference there. So I think shares could go up, from current levels. We're trading about 160, 160 a share. Add 50% to that, or $80. I think you get to 240 in the next, pretty conservatively, in the next 3 or 4 years. But it could be, if Repatha really takes off, or if Repatha gets a more broad approval, you could see that $5 to $7 billion sales number ramp up much more quickly. And instead of taking 3 to 4 years to get to this 240, you get there in 1 to 2 years. But I think the important thing to remember is, I didn't talk about AMG, what is it, 334, I don't know, whatever the migraine antibody drug is. That could have, people are saying this could be multi-billion dollar drug. And I didn't talk about Lenore, although I don't think anybody's expecting anything great out of that. We haven't talked about anything else in the pipeline that could be coming down, and we haven't talked about acquisitions that could definitely help. So anyway, sorry that was a long explanation, but this is why I'm an owner of Amgen. I don't warrant the accuracy of anything in this. This is just off the top of my head, what I can remember. But so be sure to verify it for yourself. But I think it's a good investment.